Gold is at an all-time high. Small cap is also at an all-time high. That's not bullish. That's a signal that the market is over-leveraged, overheated, and overexposed. And in this video, I will explain to you what you can do as an option seller. When risk on assets like small caps pump, it signals greed, it signals the market is extremely bullish. But when risk of assets such as gold also pump, that signals fear. You can't have both unless the system is unstable. That's not a healthy rally. That's euphoria and paranoia mixed. That's how cracks form. So let's be clear. The markets don't crash because gold and small cap are at all-time high together. They crash because of deeper issues, such as in 2008, subprime loans and leverage. In 2019, repo market stress, and later on COVID. In 2022, interest rate shocks, but in each case, gold was rising and small caps were peaking before the collapse. That combo is like smoke, not the fire itself, but proof that something underneath is overheating. It's not the causation, it's the correlation backed by fear and greed hitting max levels at the same time. That's the imbalance that breaks things. So if you let take a look at gold right now, like the Indian gold, it just crossed over 1 lakh, okay, and it's like at all-time high. And if I like turn on volume, like weekly volume, even when the gold was like at about let's say this day, when the gold was at 90,000, instead of volume going down, you know what happens, right? When there is a rally, smart money enters when the market is at a bottom and they sell at the top. But in this case, volume was rising as the rally was also, rising. So this is something that is off because normally, if we like, volume should have been high, like over here, like if I draw, like volume should have been high on this phase, on this phase, on this phase, on this phase. So whenever you see a like consolidation, that's where the volume is supposed to, rise, like start rising. But in this case, the volume is rising as the price is also rising. At the top, mostly retailers buy because they see a rally and they start buying. So this is painfully clear that smart money is really fearful about the markets at the moment. FIIs are constantly dumping Indian markets, selling more than 40,000 crores a month. And retail is pouring money into the markets, thinking the markets are going to hit all-time high. But small caps don't go to all-time high in recession environment unless the market is mispricing risk. Gold also does not move up unless it's something is deeply broken, currency, debt, or trust. Okay, the coexistence of these two trends means the system is stretched. One wrong move, like a downgrade on the Nifty target, a debt crisis on US markets, a liquidity freeze, and the whole thing snaps. So what you can do as an option seller. So first of all, if I take a look at the VIX right now, it's at about 12. Okay, so that is painfully low. If you are like an intraday seller, that means you get like almost low premium. Okay, and the markets don't move as much, but they do move. So there is a high chance that in the future, once the market starts realizing what's wrong, the VIX can start like rising up really fastly. And if you're like a monthly option seller, this is especially for you, by the way. If you're a monthly option seller, you can lose a lot of money if VIX starts rising up. In fact, monthly option sellers don't lose because their predictions are wrong. They lose mostly because the volatility goes against them. So yeah. And if you're an intraday option seller, well, in that case, you should also don't over leverage yourself. I see people having, let's say, 5 lakhs account, and they max out their entire account. They put the entire 5 lakhs into option selling. Like, brother, chill. You don't have to put the entire 5 lakhs into like the trade. Use the 75% method. Only use 75% of your margin available for option selling. Why do you have to use 100%? Even I don't use 100%, okay? So what are some things that you should keep your eye on? So first of all, if I go back to gold, if the gold continues to rise and it does not stop, that obviously means that more institutions are buying into gold, and the dollar strength, you need to look at that. That means DXY. You need to look at this. because this shows the strength of dollars. And the bond yields, currently the Indian bond yields are at about 6%. And if the VIX starts climbing, VIX should not climb above 17. That's the peak level of like normal market. So above 17, if the market is ever above 17, like I mean VIX, that means something is wrong with the market. Whenever market goes above 17, something big happens, and you can see the historical trend. Usually 75-90% of the time VIX stays under 17. Whenever it goes over 17, it spikes up and comes right back down. You can see that in the chart. Wait, let me switch to weekly, right? So look, whenever VIX went up above 17, it came right back in after a spike. They ignore this one. This was the COVID crash. And gold is diverging from equities for more than 2 weeks. Any of these, that means exit signs are flashing, and you should be cautious. And Nifty Small Cap is not just up, it's at all-time high with weak internals. Valuations are bloated, EPS hasn't caught up, RSI is in overbought territory, and I'm telling RSI because that's what you guys understand. Meanwhile, DII's inflows are just hitting all-time high. DIIs, they buy at any dip. Okay, don't look at DIIs. They are ought to buy because DIIs are nothing but your SIP money flowing into the markets. Okay, the moment a recession hits India, those inflows will stop immediately, and then who will save the market? Retailers are gone, DIIs are gone, FIIs will of course sell the market. People who will buy at the bottom are of course going to be the prompt desk because they are meant to make money. Anyhow, they are not like institutions where they move very slowly. And gold, now let's go over gold. Gold doesn't lie. Gold is up over 61%. If you think I'm lying, okay, then here you go. So if this is the 1 year chart, so 1 year and 2 years, in 2 years, gold is up more than 61%. 61% on a non-risk asset, okay? You basically made the entire gold market a small cap market. It's acting like a small cap or like crypto at this point. That's not an hedge, that's migration. People are preparing for something systematic risk. And if gold keeps flying while stocks stall, the unwind will be brutal. Gold can hit 2 lakhs in a matter of months. Okay. And of course, I'm not saying that gold will keep rising or markets will crash. One of these two things will happen. Either gold will crash or the markets will crash. One of these two things will happen in the next 1 year. So history shows it's usually equities. Okay, so it's normally the stock markets. Don't fight the liquidity, but don't ignore macro signals either. This is not a dip to buy blindly, it's a setup to observe or short. So this was basically my entire research of about 1 day and sorry 2 days compiled into a 5-minute video. And if you liked it, please let me know because this is something serious because the markets aren't supposed to behave like this. If I switch over to the international gold, which is this one, and if I switch to monthly, it has basically never stopped rising since about 2005. That is like before the 2008 crisis, the entire global financial collapse of 2008. So yeah, I hope you guys liked something in this video. Like if you seen this before, and I'll see you guys in the next video.